the alternative. I think that this administration will be much better for the country, but it will ultimately be very good for gold too. Look, when Trump won in 2016, gold sold off hard for a few weeks until mid-December. But following that, there was a huge gold rally through much of 2017. You have a situation where there's been massive short positions by the commercial banks across the board in gold and silver that have been literally bleeding them dry for the better part of the last year. And this was an opportunity on the Trump euphoria to push the price down a little bit to get the algorithms to start selling, which then triggered a pretty large sell-off.
After 6 consecutive days of losses, gold prices have regained stability, climbing above the $2,600 mark per troy ounce in a promising start to the new trading week. The precious metal has managed to trim part of its recent steep pullback, buoyed by a softer U.S. dollar and fluctuating treasury yields that have created a favorable backdrop for gold. The U.S. dollar, which surged to a one-year high last week following a strong rally fueled by market reactions to President-elect Trump's policy proposals, softened by 0.4% on Monday. A weaker dollar makes gold more affordable for international buyers, giving the yellow metal fresh momentum. In addition, the lack of clear direction in U.S. yields across different timeframes has further supported gold's recovery. Andy Schectman, CEO of Miles Franklin, remarked on the broader market dynamics, stating that this administration could prove beneficial for the country overall, but it is also likely to be favorable for gold. He noted parallels to 2016 when Trump's election initially caused gold prices to dip sharply, but led to a significant rally in 2017. Gold's recent correction has also been exacerbated by a rally in stocks and cryptocurrencies, which diverted investor attention. However, Schectman highlighted a global counter-trend, with central banks, including those in BRICS nations, capitalizing on depressed gold and silver prices to bolster their reserves. This strategic buying underscores gold's enduring appeal as a haven during economic and geopolitical uncertainty. Market analysts remain optimistic about gold's potential. According to Kinesis Money, the next upside price objective for bulls is to produce a close above solid resistance at $2,650. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
The alternative. I think that this administration will be much better for the country, but it will ultimately be very good for gold too. Look, when Trump won in 2016, gold sold off hard for a few weeks until mid-December. But following that, there was a huge gold rally through much of 2017. You have a situation where there's been massive short positions by the commercial banks across the board in gold and silver that have been literally bleeding them dry for the better part of the last year. And this was an opportunity on the Trump euphoria to push the price down a little bit to get the algorithms to start selling, which then triggered a pretty large sell-off. And what you're seeing is the managed money that was very long has sold a large portion of that position, which means the commercial banks go the opposite direction. Not only are they covering their shorts, they're taking the longs. On the other end, this is to be expected. I was wondering how these banks would ever get out of these short positions, and I think this is an opportunity for them to do that. But in terms of where this is ultimately going, I think nothing has changed at all. In fact, look, Trump is a proponent of very low interest rates. I mean, he'd like negative interest rates if he could. During his last tenure, he was calling the Fed boneheads for not implementing zero or even negative interest rates. And so when you talk about a situation of lower interest rates and a weaker dollar, that's bad for the purchasing power of the currency. Certainly that's good for the banks. That's good for Wall Street, but it's also very, very, very inflationary. What happens is that lately, as the front end of the market, the bond market, the yield, the rates have been pushed down. The back end's going up commensurate, if not more. In fact, they've lowered the front end by 75 basis points, and the back end is up over 80 basis points over that same period of time. In other words, the 10-year Treasury, which is the most important Treasury. It's the one that is tied to the mortgages. It's tied to the credit cards, to the auto loans. It's tied to commercial leases in terms of real estate. So yeah, I think that this was to be expected, and it shouldn't shock people. And to see it move in the direction that it is going, when you see the stock market and cryptocurrencies taking off the way that they have, again, it's only exacerbating this correction, which is really something that the big commercial banks, I think, are welcoming. Now, at the same time, where this becomes kind of dicey is that you have half of the world looking at these depressed prices as an opportunity to load up on gold and silver at subsidized prices, that being the central banks in the BRICS nations. So yeah, this is the market exhaling and irrational exuberance, if you will, because while this will be good for the country on many levels, it doesn't change the fact that even if you had a guy like Elon Musk come in and trim all the fat, all of it, and we get into a much more streamlined situation with the government.
The U.S. dollar began the week holding steady at elevated levels, with the dollar index tracking the greenback against 6 major currencies, slightly retreating from last week's year-to-date high of 106.5. Despite its resilience, the dollar softened on Monday as market participants reassessed Federal Reserve policy expectations and monitored rising geopolitical tensions. The dollar's performance was notably influenced by the Biden administration's approval for Ukraine to use long-range U.S. missiles against Russian infrastructure in response to Moscow's deployment of nearly 50,000 troops to the KSK region. This escalation has heightened geopolitical concerns, typically supporting the dollar as a haven, although the market response has been muted. Moreover, expectations for monetary policy have also impacted the dollar. Federal Reserve Chair Jerome Powell noted that the U.S. economy is growing faster than other major economies, allowing for a slower pace of interest rate cuts. While he acknowledged recent slower job growth due to hurricanes and labor strikes, the overall economic outlook remains strong. As a result, the dollar experienced a mild retreat against most major currencies on Monday. Amid this complex backdrop, gold has regained some appeal as a hedge against uncertainty. Andy Schectman, CEO of Miles Franklin, urged investors to maintain long-term convictions, emphasizing that while the dollar remains strong, market dynamics require a balanced approach. Let's get back to the interview.
Being your own bank, in my opinion, is not as crazy as it sounds. I think that this is the time to do things like that. Unconventional times certainly call for unconventional actions. If I were going to be in any bank that wasn't, I'd stay out of the regional banks. A credit union is probably better than the large commercial banks. They are not as risky as the big banks are, but they're not immune to all the problems either. So yeah, leaving enough in the bank to pay your monthly expenses and whatnot, sure. But any other cash, I think you'd do a whole lot better riding the Trump wave, if you will, the Trump train, or being your own bank and removing counterparty risk that I just have a hard time believing won't rear its head probably very soon. My biggest fear of all of this is it's kind of like a psyop, like a setup, and they want to blow up the system and blame things like free market capitalism and Trump, of course, and all of his policies for blowing everything up. And, I don't think people understand just how screwed up the books really are and the lying that we get out of the Bureau of Labor Statistics on unemployment and on inflation and just how bad it truly is. Most people have no idea, but if you were, like, for example, the liquidity in the system, the BTFP, the Bank Term Funding Program, expired just a couple of days ago. The reverse repo market is down to almost zero. The velocity in money is very